Good afternoon, everyone. You're welcome to the United Capital Infrastructure Fund's Impact Investing webinar. It's a pleasure to have you all here today, speaking to our participants and attendees on YouTube and also on Zoom, as we delve into the transformative potential of impact investing. Our theme, which is growth, empowerment, regulation, and profitability, underscores the multifaceted benefits that impact investments can bring to both investors and broader community. To our attendees, please note that this is a meeting-only session, and feel free to drop your questions in the chat box, as our speakers will be happy to address them at the close of the session. So now we will go ahead to introduce our highly esteemed panelists for today's webinar. First off is Uchenna Mparu, who is also our highly esteemed host. Uchenna is the Chief Investment Officer of the United Capital Infrastructure Fund, and he will be speaking to impact investing themes along the lines of profitability, regulation, and impact investing at United Capital in general. Uchenna has over 17 years experience in financial services and infrastructure finance, covering landmark project finance transactions. And his presentation subject today would be impact investing at United Capital. Next in line is our co-host, Olusola Taiwo, the Lead Investment Officer at United Capital Infrastructure Fund. Olusola has significant years of experience in investment banking, private equity, and infrastructure finance. Olusola will be speaking to us on the United Capital Infrastructure Fund's role in balancing impact and profitability. Next up is Nneka Eze. Nneka is the GP and Managing Partner at Vested World. Vested World is a venture capitalist firm focused on high growth and emerging companies in emerging markets, aiming to create sustainable and impactful economic growth by investing in top entrepreneurs, building businesses in core industries across sub-Saharan Africa. Nneka will be speaking to us on the impact of leveraging impact funds as a driver for growth. Next up is Manoj Sinha. Manoj is the Chief Executive Officer and founder of Horsepower Systems. And Horsepower is a company that provides energy services to off-grid or wind-grid rural communities in East Africa and Southern Asia, primarily by building decentralized hybrid mini grids to generate electricity. Manoj's presentation subject to us is impact investing in sustainable energy as a pathway for empowerment. And last but not least, we have Temidayo Ajayi. Temidayo is co-managing partner at Detail Commercial Solicitors, an astute commercial lawyer who leads the firm's commercial, capital markets, and private equity teams as co-managing partner. Temidayo has considerable knowledge of private equity transaction dynamics with experience on advising across varied transactions. She regularly advises startups raising funds and has advised various funds at both local and international levels. Temidayo will be speaking to us on legal insights pertaining to the legal and regulatory framework. So getting right into it, I will be handing over to Uchenna Mparu, our Chief Investment Officer, who will be speaking to us today across the themes of growth, empowerment, regulation, and profitability at United Capital and also at the United Capital Infrastructure Fund. Over to you, Uchenna.
Thank you very much, Titi. Good afternoon, everyone. Happy to have everyone who has joined in today. By way of a quick introduction, you know United Capital pretty well. As a business, we've been around for over 60 years. But more recently, we're in the second cycle of a 6-year strategic plan. Now, that cycle has meant that we've had to rethink and reinvent ourselves and think about how we do business. How do we render financial services? Who are the counterparties we engage with? What kind of services do we render? And ultimately, what is the goal behind the service? As part of that journey, amongst other things, we had set out to say that the financial services we provide, the capital we raise, and the capital we invest would have a demonstrable impact on the sectors where we're playing in. And so since 2021, when we launched our fund, we've been intentional to make sure that everything we do is consistent with this drive. In the power sector, we have provided a combination of advisory, capital raising, and investing in power opportunities. Our advisory work supported a company that has 972 megawatts generation capacity to introduce itself by listing on the exchange, which was completed earlier on this year. Other opportunities we have supported are corporate companies looking to raise capital to expand their generation capacity. In total, over 500 megawatts of generation capacity, which we had supported through corporate bond programs. Late last year, our infrastructure fund completed an investment in a 5 megawatt power plant. And so in the power sector, given the catalytic effect of energy, we continue to play a big role. The second key area where we continue to engage is on the public sector. We know that particularly at subnational level, there are opportunities to reach the population through financing and programs that transmit to interventions, but the capital is not always available. And so a lot of the time, what we do is work with state governments who have infrastructure and development impact projects to mobilize capital. The typical vehicle we do this is through subnational bonds, and we have supported to date up to 19 state governments, 3 of which most recently are Lagos State, Gombe State, and Bauchi State. Last but certainly not least is on the emerging corporate space. Emerging corporates are typically businesses that are small scale, looking to step up to a medium scale business. You would find that in any economy, emerging corporates are the backbone of that economy because they end up having a significant workforce. They also end up having interplay with much smaller entities. So a lot of their suppliers are of the small and micro scale, meaning that them doing business has a widespread reach. And so today we've supported a number of emerging corporates, some of whom are agro-allied exporters, some of whom are microcredit lending organizations, some of whom are commodity trading businesses. We have even gone ahead to invest in a mid-tier company providing capital for a lead recycling plant, which we completed in 2022. And so across all of these key sectors, we're permanently asking ourselves, what is the impact? But our question doesn't just stop with the impact, because the impact is on the one hand, but then there's a question about profitability. How profitable are these ventures? And so I would invite my colleague Olusola Taiwo to speak to how at United Capital Infrastructure Fund, we're seeking to balance impact with profitability.
Thank you very much, Uchenna. I was speaking to how United Capital Infrastructure Fund is able to leverage the power of impact investing to drive profitability and deliver competitive returns to its investor. To the left-hand side of the screens are selected portfolio companies that the infrastructure fund has invested in. These include industrial recycling, agribusiness, renewable energy, as well as captive power. These businesses have delivered impact around the lines of foreign earnings, job creation, reductions in emission, increase in farmers' income, rural electrification, lowering energy costs, economic development, as well as displacing diesel generators. Now, these impacts are not just on their own, they go alongside with profitability, such that the fund's year-to-date performance stands at 22.18%, and the fund year-on-year income growth is a staggering 416%. And to date, the fund has distributed 1.68 billion to investors. I hand over back to Titilaya Shamu, our excellent moderator today, to take us through the conversations around impact investing. Thank you.
Thank you so much, Olusola and Uchenna, for speaking to the impactful work that United Capital and United Capital Infrastructure Fund has been engaging in and carrying out across all tiers and sectors of the economy. Next, we will be having an engagement with NECA. NECA is the GP and managing partner of Vested World. Good afternoon, NECA.
Oh, good afternoon.
How are you doing?
Fine, thank you. How are you?
Fine, thank you. Glad to have you. Getting right into it, our first question for you, NECA, will be concerning the Vested World sectors. And we understand that Vested World has invested in quite a number of sectors in Nigeria. Our question would be, why has Vested World chosen to venture into these sectors?
Great. Thank you so much. I think it really came from this question of what is going to be the growth path for Africa. What sectors are really going to drive that growth? And my business partner founded Vested World about 10 years ago. And he was actually very inspired by what he saw when he lived in Asia and got to travel around East Asia. So the foundation of our thesis is really that Africa will become the next East Asia. And I think the learnings from the East Asia development path was that, it's not just going to be technology that's going to unlock growth, but that sectors like agriculture and agri-tech and consumer sectors, manufacturing are really critical parts of that, both in terms of the GDP contribution, but also, say, particularly important in terms of job creation. And we know that that's a critical area of importance for Africa. I think the other learning was that private capital is very important to that journey. And so the question was, what are those sectors that we can really invest in that will both unlock outsized economic value for the continent and also be able to deliver returns for our investors? And that's really how we came up with investing, I'd say, outside of what early stage sort of focused fund generally can invest in. And so we have invested in companies that are in what we call the enabling technology space. And that might be companies that are more in the mobility sector, for example, or in health tech. We've invested in a number of agribusinesses and agri-techs in Nigeria, for example. Tomato Joss is probably the biggest one. In a way, we're the first sort of institutional check into the company. And then we've also invested into a number of consumer product and service companies. And that's both sort of, hard products, if you will, as well as a range of service companies, both in Nigeria, but also across East and West Africa. And I think we like to look at sectors or companies in sectors that have potential to be really category creating and that have potential to scale to be, maybe one of the biggest providers in that space. And often sectors that are overlooked or underserved by other companies in the space, maybe that are ripe for some sort of innovation or technology application. We're not seeing a lot of, we're not doing a lot. I think we have one biotech company in the portfolio, but we're not doing a lot of sort of core R&D type investments. It's much more about how can you apply technology to the biggest problems that we're facing across Africa, and how can you actually solve those? It turns out that the sectors we like to invest in end up, contributing significantly to GDP. So if you think about agriculture, both in terms of GDP contribution on the continent, it will be anywhere from 30 to 60%. In terms of employment contribution, it's probably, let's say, 40 to 70% in terms of employment contribution. And so these are massive sectors that have the ability to be transformed. In agriculture, obviously, the fact that we're a net food importer on the continent suggests that there's an opportunity, especially given that we have the most sort of amounts of arable land. I'd say the fact that we also, I'd say on average, have an emerging middle class that's starting to demand higher quality products and services also suggests some opportunity around consumer spending going up and consumer opportunities being of interest. And I think that's really why we like to invest in those sectors. We see a large economic opportunity, and we see great potential to create jobs.
Thank you so much, Emeka. We find it quite commendable that Vested World is focused on not just delivering economic value, but also making an impact and ensuring that the social and economic sides of the value chain are duly delivered. Thank you so much. Our second question now feeds into the first one, to be honest, because it speaks to the return prospects of these target sectors. We understand that some sectors may be more profitable, others may be riskier than the others, and we'd just like to speak to what your experience has been investing in these sectors.
Well, definitely. I think we've learned a lot. So, we started out by investing in sort of individual deals through special purpose vehicles, and then launched our first fund in 2018, launched our second fund that we're currently investing out of a couple years ago, and have invested in about, call it 30 plus companies over that period of time. I think one of the big questions, as I said, is really, is that market opportunity there? But the bigger one is, have the companies really achieved what we like to call product market fit? So they have, recurring customers or some clear demand that is scalable that the companies can actually go after. And I'd say over the years, we have seen companies move from sort of maybe not being profitable to profitability. We have also invested in a number of companies where we're the first outside investor, and many of those have been profitable before we invested. So I think there is definitely, potential for returns in the different sectors that we're investing in. We're starting to see exit opportunities across the portfolio. I think the constraints are many. So I think one that we're all tracking as venture capital investors is just the amount of capital actually coming into the continent at present is pretty low. I think the numbers from the Africa Big Deal folks just came out, and it looks like we're something like 50% below H2 of last year, in terms of H1 for this year, in terms of venture capital investments, at least that have been announced. And I think we're about 75% or so lower than H1 last year. So that means for us, how do we then think about getting an exit for some of the positions that we're holding? Probably means it won't necessarily come from financial exits, and then we have to start partnering with strategics. So thinking about companies that are already active, let's say in a consumer space or in a mobility space or in a health space for some of those positions, and saying, okay, what would it look like if you wanted to acquire either our position or acquire the company? And I think you have to be, I guess, creative in a way to think about that. But yeah, I think the return prospects are here. It likely is going to take longer than maybe an American VC style fund, but we've built that into the way we structure the fund, as well as we think about the fund life and the return expectations that we put forward.
Thanks, Nneka. As you earlier mentioned, the Nigerian space is teeming with opportunities, but then we also understand that there are several constraints that are peculiar to this part of the world. And we would like to know what piques your interest and why you have chosen to continually invest in Nigeria, given the fact that Vested World could very well choose any other country on the continent. Why Nigeria?
I think it's, in a way, there's no other place like Nigeria, first of all, as you all know. So I think it somehow just is always going to be central to any Africa conversation. When I moved to Nigeria 10 years ago, the firm that I was at didn't have a Nigeria office, but somehow we had a Senegal office at the time. We had a Kenya office. There was an office even in South Africa. And it was clear that there should be an office in Nigeria if you're in all these other countries. And so I think the size of Nigeria alone is always going to be attractive. We just have the population benefits. I think we obviously have to manage those population benefits and ensure that people are employed, employable, employed, and all of that. So I think the market opportunity, simply because of the quantum that we bring, is really there. But I'd add to that, it's also the landmass. So just actually in agriculture, if we think about it, we're quite blessed with a range of agroecological zones. And there's quite a bit of arable land that's still, out there. It's not necessarily easy to aggregate, but it is out there. We do have a really strong foundation in terms of the creative industries, and I think are starting to really show and demonstrate that across a range of sectors, including, in film, in fashion, in music, in beauty. I think there is just something.
I think she's currently experiencing network issues. We expect her to be back in a bit. Hi, Nneka, you're frozen. Can't hear you.
So I'll suggest we circle back to Nneka when the connection improves on her end.
All right, that works then. To all our online attendees and participants, if you have any questions for Nneka, kindly use the chat box and also be informed that our panelists would attend to your questions at the close of the session. So to our online participants on Zoom and also on YouTube, please use the chat box. Next, we would be having Manoj. Manoj, good to have you with us. Good afternoon.
Good afternoon. Good to be with all of you.
Thank you. Getting right into it, we would like you to please tell us about Horsepower Systems and why the company is operational in Nigeria.
So I'm one of the co-founders of Horsepower Systems, a company that I started in India 16 years ago. So we are a startup, but it has been around for more than a decade. The reason I started this company in India, which was 16 years ago, is because when I was growing up, I saw the issues of lack of electricity. I was a little bit fortunate to have access to some electricity. And because of that, I got many opportunities that my own relatives and cousins did not get. And I was able to come to the United States, pursue my education, and so on and so forth. But my first cousins, even to date, struggled to come to the middle class ladder. So I saw the benefit that electricity can bring to people's lives, including mine. And having been trained as an electrical engineer, I had no option but to try to solve this problem. So that's why I started this company in my home state in Bihar in India. Fast forward that, so 2008 is when we started, and 2020 is when we entered Nigeria. For many reasons that Nneka was saying about Nigeria, why it is such an interesting country. One of the beautiful things that happened in Nigeria was the country actually wrote a policy on mini grid in 2016 winter. And that was one of the reasons for us to come to Nigeria, because the regulatory environment was quite clear. Alongside, of course, multilateral institutions brought in capital for us to be able to access those capital, including the World Bank. And that's how we entered Nigeria. The scope of the problem in Nigeria is pretty large, as it was in India when I started the company. So Nigeria has a population of about 200 odd million people. 90 million people do not have access to any electricity. And the remaining people have access to unreliable electricity and depends quite a bit on diesel generator. So it was a pretty ripe market for us to come in to solve the energy access and energy reliability problem in a climate friendly way. So that's why we entered Nigeria in 2020. It was not a great time to enter. We entered in January 2020, not knowing that COVID will happen right after. Having said that, we now have a footprint of a total of 300 plus mini grids across 2 continents that we have mini grid footprints in, which are in India and Nigeria. Nigeria is growing quite rapidly. Our footprint in Nigeria right now is about 40 mini grids, and we are growing at a pace of 5 to 7 mini grids per month. A mini grid, just for the audience to understand, a mini grid is a decentralized power plant generation, which can range from, let's say, 50 kilowatt to up to a megawatt. And we also do distribution network up to a distance of 5 to 7 kilometers that can serve a variety of customers that includes residential, small commercial, and small factories and other institutions. So that's what a typical mini grid looks like. And we are currently present in the state of Nasarawa and Plateau and expanding in many other states as well.
Thank you for that very detailed response. We consider Horsepower's presence in Nigeria and to be a very timely and vital one, considering our consistent power struggles as a nation. And that brings us to our second question. We would like to know what challenges Horsepower Systems faces and how the company has been able to overcome these challenges.
So the challenges for a startup are plenty, but let me summarize that into 3 main buckets. One is the regulatory and policy. And like I was mentioning earlier, we have been very fortunate to work with REA and NEP, National Electrification Program, under REA flagship that has been very, very productive and very efficient, which is not something that you expect when you're operating in emerging economies. So very positive policy environment that has enabled us to not just set up our business, but start scaling at a pace that we are scaling. So I would not call that as a challenge, but I would call that as an opportunity where actually Nigeria is also at the forefront of innovating on the policies. Uh, Probably the only country that I know in Africa subcontinent where the mini grids can interact with the main grid, and there is a policy and a framework to allow that to happen, right? That creates a lot of, in my mind, a lot of certainty for investors as well to come in. So that's number one. That challenge has been fortunately solved to a large extent by government policymakers. Second is capital and macroeconomic environment that we operate in, right? So a lot of capital that we do need to build an asset base. We are in infrastructure business. We are expanding at a pace of, like I said, 8 to 9 mini grids per month in Nigeria. We are doing actually 30 mini grids per month in India. So we need a lot of capital to expand and a lot of cost-effective capital to expand our footprint. Um, Fortunately or unfortunately, we get funding in US dollars, and we have had certain headwinds in Nigeria, as you know, from currency devaluation perspective. That puts us in a lot of risk, right? Our cash flow is in Naira. Our investors are investing in US dollars. That's a currency mismatch. With currency devaluation to the extent that it happened, we can actually go in a default if we were taking a large amount of unhedged US dollar loan. So not to go into too much detail. So that's one of the challenges that we have been facing in Nigeria as we are growing, because dollar dependency can create a problem for two reasons. One is the currency devalued, but also repatriating US dollars out of Nigeria is not trivial. Fortunately, we have been working with UCIF, not to go into too much detail, that actually mitigates that problem by providing local currency financing at a reasonably good cost of capital so that we can expand our footprint as fast as we would like to and service the debt with same currency. So we eliminate the currency devaluation and repatriation problem that we have been facing. Number three is in terms of, for a startup, how do we really grow? We have capital. Let's say we have plenty of capital. How do we really grow? We grow by actually attracting talent and grooming them so that they can help deliver the plan that we are building, right? And actually, I must say this, at least my experience in East and West Africa. My team in Nigeria is 100% Nigerians. We did not, parachute expats, including myself, in to build the business in Nigeria. And I'm very pleased with the talent pool that we have access to in Nigeria. So yes, these are challenges, but we are very pleased with the solutions that we have been able to discover and find through partners like UCIF and others that has helped us build the business.
Thank you for that response, as it quite captures the answers that we were expecting to get. And the last question would be how Horsepower Systems views impact, and how is impact measured at Horsepower Systems?
So when I started this company again 16 years ago, it was actually to serve people in the rural and peri-urban areas. So typically we don't even look at urban areas projects. So we really want to focus on the economic activities of the communities that we serve in the rural parts of India and Nigeria, as well as peri-urban areas. So our core offering is these mini grids, right, which are 52, let's say, megawatt in capacity. We are delivering 100% renewable energy at most places. So we are impacting the climate by displacing diesel generators at 100% rate. That is actually our record at all the 40 sites that we are now operating in Nigeria. Second is we care about profit and people. So we are impacting people's lives by providing electrons or electricity, but we are not stopping there, right? So if we are providing electricity to a carpenter shop, which is, you can call them MSME customers, what they do initially is they're going to be using our electricity for lighting purposes, maybe a ceiling fan to cool down, but their manufacturing is quite manual. Today, they are manufacturing 2 to 3 furniture pieces per month using manual labor workforce. But what we really bring to the ecosystem through this platform approach that I talked about is beyond electricity, we are actually providing them with electrical appliances. In this case, it can be sawmill, planing machine, and credit financing that appliance, because most of these customers don't have that much disposable income or cash. So now this carpenter shop is going to go from manual operations to automated operations, resulting in expansion of up to 10 times productivity. So 2 to 3 furniture pieces may become up to 50 furniture pieces production. So the economic impact is multifold with the intervention that we are bringing in terms of actual tangible economic activities. So the broadly speaking, we care about people, planet, as well as profit. Husk has committed to UN Compact in 2030 to deliver 5,000 mini-grids across Asia and Africa. And we plan to eliminate 7 million metric tons of CO2 from the atmosphere by displacing diesel. And alongside, we want to create profit of $100 million on a quarterly basis as well. So we love people, we love planet, and we love profits.
Thank you for loving people, planet, and profits as well. We appreciate your presence in the webinar and believe that your answers to our questions have been very enlightening for our attendees. So thank you once again, Manoj. Gentle reminder to all our online participants and attendees, please drop your questions in the Q&A box for our Zoom participants and in the chat box for our YouTube participants. Last but not least, we will be engaging with Temidayo Ajayi, co-managing partner, Detail Commercial Solicitors. Good afternoon, Temidayo.
Good afternoon, Titilayo.
Pleasure to have you.
Thank you so much for having me.
You're welcome. Our first question would be, considering the fact that we understand that Detail Commercial Solicitors has quite a level of expertise in this space, in the impact investing space, we would like to know if there are specific sectors for impact investing that come with legal incentives in Nigeria.
Okay, so now what I will say is that there are, in terms of legal incentives, I would say that there are certain regulations that put in place some incentives. Many of them are tax inclined, and they are specific to certain sectors. So I would say that impact investors or impact investing can borrow from these incentives because because the sectors are impact-based. And to just identify them, a lot of these incentives are actually provided by the Nigerian Investment Promotion Commission, who plays an active role in, in regulating foreign investors, because so they essentially just keep a record, right, of investments that come into Nigeria. And so just to identify some incentives per sector, in the agriculture sector, they have a 95% capital allowance. I think that, well, not I think, but then they have, so for as long as you're engaged wholly in agricultural activities, then you have an unrestricted capital allowance. There's also an agricultural credit guarantee scheme fund, right? I know that impact investors will not necessarily be dipping into this fund, but I suppose at a point when they invest in a company and it needs more funds, they can encourage this, right? And then in terms of hospitality and tourism, which is another, let's say, impact investing, right? What they try to do is sort of encourage foreigners to come to the country. So you're basically, the allowance you have is that 25% of your income, right, it's 25% of your convertible currencies, right? You have like some you have some tax waivers, right, for 25% of your convertible income. As long as you've put that income in a reserve fund, you have access to that. In the power sector, I believe the power sector really enjoys more of these incentives because they have 0% on their import duty on equipment and machineries. And I'm sure that Manoj can testify to that in his business. And solid minerals as well are exempt. So I would say that, they sort of have like some sort of pioneer status. So for the first 3 years of a solid mineral business starting its operations in Nigeria, you're exempt for the first 3 years of its operations. So I think that gives you some allowances. And I think that you also have for businesses in solid minerals, there's an accelerated capital allowance at 95% of your qualified capital expenditure in the first year, right? In the first year of use of the mining assets. So I think those are really great incentives. And then there's also the last sector I will speak to would then be the manufacturing sector, because we all know that FMCGs are also they're also making impact, for the general public, I would say. And what you have, the incentive you have there is about 60% of your repayment interest. So 50% of repayments of the interest by those who borrow from banks under the scheme, under certain schemes, perhaps in agriculture scheme, for example. Like you do not really need to, you have a waiver of that 60% payments, right? So I think those are the key things. But I think something else to just identify is the fact that depending on if the impact investing fund is actually investing in a new entity, right? It's just understanding, if you can get pioneer status, if you can get waivers, because there are those incentives. So it's just registering, ensuring that the company basically registers to get, pioneer status and have waivers for its tax. And it's a huge relief to companies.
Thank you, Timidayo. That was quite enlightening. Given the fact that we have participants from different sectors or different tiers of the investor community, our second question will be from an investor perspective. And the question is, what due diligence should be carried out before investing in an impact fund?
Okay, I think that, with due diligence, and just to understand due diligence, really is just doing a forensic investigation of a company or a business. And in terms of an impact fund, aside from ensuring that they are properly registered with the applicable regulator. So in Nigeria, the applicable regulator of funds would be the Securities and Exchange Commission. Aside from, doing that regulatory overview, I think it's really key and important to understand, I would say there are 5 key things for me. One would be understanding the fund's impact strategy. You need to understand the social or environmental outcomes of what the fund seeks to achieve. You need to ensure that, your values are aligned in that perspective, right? The investor should, talking on the point of values, my goal as a potential investor has to align with the goal of the fund. If it's misaligned, then my recommendation would be do not invest. The second thing is credibility of the fund manager. Now, we know the fund manager plays a huge role in making investment decisions. And so you need to, I would say, check out the fund manager's track record on managing similar funds. Also look out for the experience in achieving impact goals. So that means that are they achieving the goals of the fund? And then obviously it's also I think that another key thing in terms of the fund manager, beyond fund manager, you need to really look at the team, right? And you need to ascertain that the team actually has the expertise for the impact for which they're investing in. So because they have to make within the fund manager and its team really has to be responsible for measuring and managing the impact. So you know that these are the objectives. How do we measure the objectives, and are we achieving the objectives? I think the third thing would then be, I mean, I think I'd mentioned that in passing, which is your legal and regulatory compliance is properly structured. There are no deficiencies from Securities and Exchange Commissions. Your filings are up to date with the companies and with the Corporate Affairs Commission, if it is a corporate structure, and if it's under a trust or an LP structure, then are they being, you know, is the fund actually being run in line with the conditions of the underlying agreement? So it's very important to have that identified. I think the second thing is you have to look at the financial performance and their risk assessment. You need to look through the records, identify how much revenue they're getting, right? How much returns they've gotten over the past years, and which is important in terms of like their track record. And I think the last thing is their exit strategy. Understanding how a fund plans to exit its investment is very key, because you need to consider whether, you know, that strategy has potential for continued positive impact after the investment ends. So you do not want a fund who, after the exit, right, the company dies, but there's actually something that, you know, ensures that the impact of your investment in that company, right, remains, and it's something that continues to be a guiding principle for the fund or for the targets, right? And I think that, to be honest, understanding that the impact of the exit strategy, it helps because it determines how sustainable the sustainability of the investment, right? So I think those are the 5 key things in terms of due diligence.
Thank you so much, Temidayo. That was a very enlightening response, and we'd like to appreciate you for your time in the session. We would be handing over to Nneka. Nneka, are you there?
Yes, hopefully the connection is all right. We'll see.
I hope so too. Yeah, so we'd like to hand over to you just so you can round up.
Yeah, definitely. Well, I think I was literally saying you need to be connected. And honestly, I was talking about relationships and how to navigate the environment when the connection cut, the internet itself cut. But I think really what continues to drive our interest in investing is also the entrepreneurial ecosystem in Nigeria. I think this is what I was going to sort of close with. We've really been able to back some powerful entrepreneurs across the companies that we've invested. So in Nigeria, I think we have about 9 portfolio companies. That includes companies like Shutlers, Tomato Jaws, Drugstock, Terragon. It includes companies like Wella Health and, you know, a whole host of others who are actually operating in Nigeria, like Viamo and Vanu, Jetstream, Be Free, Sabi, et cetera. And I think across those companies, we're just continuing to see opportunities in the companies themselves, but also in the ecosystems that they're helping to build. So finding opportunities to invest in companies that those entrepreneurs introduce us to as well. And I think that entrepreneurial spirit that we see in Nigeria is really deeper than probably any of the other markets we invest in. Obviously, my Kenyan colleagues may argue that they have a deep ecosystem over there, but I think even just the number of deals and the level of entrepreneurial activity in Nigeria just doesn't meet anywhere else. So that's why we continue to be bullish on Nigeria for the long term, even where we have, short-term economic constraints that Manoj rightly laid out as well.
Thank you for that powerful closing, Nneka. And we'd like to say a very big thank you to all our panelists and our hosts for that very engaging and exciting session. And that brings us now into the Q&A section. Please keep your questions coming in as we've been getting quite a number of them. Getting right into it, we have questions for the UCI team members on the call. The first is from YouTube. Judith Wire from YouTube says, congratulations, United Capital, on the third series of the UCI fund issuance. I have 3 questions regarding the fund. First question, is the fund only open to institutions or investors, or can individuals invest in it? Over to you, Uchenna.
Thank you. Really quick, it's open to the general investing public, so institutions and investors, yes, but we also have individual investors who are invested in the fund.
Great. The next question is there also a minimum investment amount?
Yes, there is. The minimum investment amount is 50 million naira.
The last question is regarding the performance of the previous series. How did the previous series perform financially?
So we're happy to note that the fund has met its targets, which is to continue to outperform the benchmark being the FGM bond. Year-to-date performance for the fund, which Olusola had touched on, is at 22.18%. And we are so incredibly confident that we'll continue to deliver returns as competitive as that going forward.
Thank you, Uchenna. And the next set of questions that we have now are for the panelists. First question for Manoj is Cost Power working with the government to provide and improve its electricity solutions?
Yeah,
that being the Nigerian government, sorry.
Yeah, thanks for that question. Yes, absolutely. The day we entered Nigeria market, we have been working very closely with REA, Rural Electrification Agency, to deliver solution that works for the Nigerian market and communities that we work in. And the most recent example is signing a deal of 250 megawatts as a RESCO with REA as an MOU that we want to deliver in Nigeria market over the next 5 years to do 2 things. One is transition Nigeria in actually economically viable way from non-renewable energy or fossil fuel to renewable energy, and to increase the reliability of electricity that actually is delivered to the end customers. So that was the most recent deal announcement that we made with REA, which is a 250 megawatt RESCO MOU that we recently signed. Thank you.
Thanks, Manoj. Next is for Nneka. And the question is, what are the requirements for accessing funding from venture capital funds such as Vested World?
Yeah, I think in general, the requirements are relatively similar. Each fund will obviously have its own criteria, but we like to really get to know the founder and the founding team and understand, what they're bringing to the table in terms of either past experience or lived experience to solve the problem that they're trying to solve. We like to really understand the product or service that's being provided and what's that fit between product and market as well. For us, we generally invest at Series A, and that means that the company has some amount of track record and sort of history that we'd also want to better understand. And then generally like to see a sizable market opportunity as well, where we say, okay, this company can actually have a significant impact and significant potential for returns. And maybe also we see that this set of people can actually go about capturing that market opportunity as well. So I think all of those are things we try to, keep in mind and take into account. We do a fairly rigorous diligence process as well. I was just typing an answer around, the contact, but generally we have known companies on average 2 years before we actually invest in them. And so it ends up meaning we get to know the company really over time and then go through a pretty rigorous diligence. I think that's not always the case, but in general, you should expect to see some sort of a review and diligence process, really a getting to know you, even to see if you want this investor in your business, because we are equity investors. So we'd like to, own a % of the company. And we generally take board seats and really help to scale companies through both business development, fundraising support, et cetera.
Thanks, Nneka. The next question is for Temidayo. And the question is, what laws or regulations should I consider before making an investment?
Okay, so I think that question is really wide. But first things, I mean, an investment for impact investing, I wouldn't want to say that there are no. You need to understand the specific laws for the sector you're going into. That's very key. Once you have an understanding of those laws, you'll be heading in the right direction. That's one. You need to understand the rules of the SEC. If you're investing into a fund, you need to understand how a fund works. You need to understand how a fund is managed. I'm sure that if you engaged a fund or fund manager, for example, if you went to UCIF, they would give you some guidance on, what it is, the role their fund plays and how they measure things. And then for the investment portfolio, I'm sure that a lot of fund managers, because they have to keep abreast of regulation, would have, in their offices, they would have a list of the rules and the laws of those sectors that they invest in, and they keep on top of emerging regulations as well. So, I mean, the question is wide, but I would say understanding the laws and regulations of the sector you're investing in is very, very, in fact, it's more important. And then understanding the fund you're investing in. So if it's a Nigerian fund, a Mauritius fund, whatever fund, you need to understand the structure and also understand the portfolio. So that would be my response.
Thanks, Temidayo. Over to the UCIF team. We have a question that asks how UCIF mitigates the risk of the devaluation of the local currency.
Thanks, Titila, for that question. And it's helpful because Manoj had touched on it. So the first thing to note is that because we're a local currency fund, we don't have FX, so to speak, as a consideration when we're taking in capital. However, we do recognize that a number of the companies we're investing in, if they have imports, then the cost of those items could go significantly up where there's a depreciation of the local currency. And so there's a number of strategies that we're using. Perhaps amongst the leading strategies is we prioritize businesses that have an export component to them or earn FX in some regard. So whether it's an agro-allied producer that's exporting, or for instance, our lead exporting plant, because those companies earn in FX, that inflow represents a natural hedge. Today, about 50% of the companies is about 50-50 in terms of 50% export oriented in our portfolio today. So that's one thing. The second thing is we do like a number of projects that are where there's a brownfield component to it. So either we are looking to come in and bring in long-term capital for an existing financing or to do an expansion of an existing asset. Because when you find that there's an existing asset, you find that there are opportunities for you to maximize that, get good returns without undue exposure. We do recognize that one last thing is that even where companies do have the local currency and want to buy the FX, it has sometimes been a bit of a challenge. And so just by having companies within our portfolio that are export-oriented, we can match them to say an exporter within our portfolio can then provide that FX to an importer within that portfolio, just acting as a bit of an intermediary to help seamlessly move business along. Thank you.
Thanks, Uchenna. And the next question is for Temidayo. And it says, with the recent passage of the Electricity Act, is this a favorable climate for investments?
Okay, then Electricity Act. All right, so yes, it's favorable. I think that with the passage of the Electricity Act, it opens it creates opportunities for like independent electricity licensees to come into the space and the renewable energy space. So I think it's like I would call it almost a level playing field. And then because it opens up more competition. So I think it's more favorable. I think that the power sector, just developing the power sector, I would say it's a golden ticket. But we all know that more and more regulations will come from the states, and also hopefully there would be more areas and opportunities for investment. But I do think that it's favorable for the investment climate in the power sector.
Actually,
Thanks,
may I
All right.
add my
Yes.
my 2 cents?
Yes.
So overall, yes, it's a positive development to decentralize some of the decision-making power back to the states from the federal decision body that happens. But it also may, in India, I know that it is both federal and state level. It also creates a lot of potential challenges for developers like us, because as states pick up these things which are new to them, there is going to be potential problems in policy mismatch between what federal government has already done, and they actually in Nigeria have done a beautiful job. So we are positive, but a little bit scared of state regulators coming in, and they may conflict with what is already in place. So, positive with some some risk factors that we may see in state level regulation as it appears. Thank you.
Thank you, Manoj, for weighing in on that as well. Next question is for Nneka. An anonymous attendee is asking, do VC funds invest in dollars or naira?
I'd say the majority are investing right now in dollars. There are a few funds I know of that are currently raising Naira-denominated VC strategies. And our hope is that there will be the adequate capital to really back those funds and sort of show the way, if you will. But for now, I'd say the majority of VCs are investing in dollars, and so have to really have those considerations in mind, similar to what Uchenna was mentioning around looking at companies that have, I'd say, either export-linked revenue, so companies like Jetstream that are helping move agricultural exports, or bringing in solar panels, which are generally dollar-denominated transactions, or really just be able to grow beyond the devaluation pressure, beyond the inflation pressure that we face in the markets we invest in. Our hope is over time we will see more locally denominated facilities, but I think it takes moves like have happened in other markets, I'd say especially South Africa and Ghana, where you have pension funds and regulation around investing in domestic fund managers, in domestic currencies, not only sort of in government securities. So our hope is that, funds like UCIF and others are really able to scale and grow and, invest not just in like larger PE type deals, but also really early stage transactions as well. But I think it's going to take some time.
Thank you, Nneka. We're gradually winding down. The session would soon be coming to an end. But I think we have room for 1 or 2 questions. So someone is asking, he said, I like that the United Capital Infrastructure Fund is investing in a variety of sectors. What sectors do you plan on investing in with this Series 3 raise? Same as the previous series, or are you diversifying?
Thank you, Titi. So across all our investments, diversification is a key part. In fact, our investment policy precludes us from concentrating not just in any sector. We can't even concentrate in any specific sponsor. So diversification is key. We are actively looking at power, renewable energy, agribusiness opportunities, which we've played a role in industrial recycling. But there are other opportunities that are coming to the fore, the opportunities for telecommunications, which we're looking at, the opportunities in the healthcare space, which we're also looking at. Across board, the advantage we bring as UCIF is we provide long-term, and in terms of tenure, we're doing up to 10-year investments local currency financing, meaning that the investor is getting capital in local currency for projects that have gone through a very extensive and thorough due diligence process. Ours is a multi-layer process, and we apply that to all the deals. I did note when Nneka spoke about, businesses in conversations up to 2 years. We sometimes experience that, but as a requirement, we like sponsors because we're a debt fund. We like to invest in sponsors that have been doing what they've been doing at least a decade. That shows us proof of track record. It shows us some consistency, and we're able to support them, which is one of the reasons why we're working very closely with Manoj and his team on that. Thank you.
Thanks, Uchenna. One more question. This is from YouTube. Silo is asking, what is the tenor for this kind of investment, minimum and maximum tenor, and also how easy is the exit process?
The tenor for the investment is 10 years. Investors can exit at the second anniversary of the fund. Please reach out to us, send us an email, and we can give you a lot more detail about this.
All right, thank you all for your time. Please note that the recordings for this session will be available on YouTube. However, for any further questions, clarifications, or inquiries you may have, kindly direct that to the UCI group email, which will be on display immediately or as soon as possible. As I hand over to Uchenna Mparu for any final words.
I would say thank you so much, everyone, for staying through to the very end. We have run slightly over, so we will be as brief as possible. We've heard from our wonderful panelists today about growth potential of Nigeria, just having 200 million people in one contiguous space, as underscored by Nneka and our entrepreneurial drive. We've heard from Manoj about people, planet, and my favorite bit of it, profitability, which we know is very important for businesses. We've heard from Temidayo speak to the legal framework, identifying that there are gaps, but it behoves every investor to understand the sector they are operating in, to be able to take advantage of the opportunities arising out of the Electricity Act, and to be able to do their homework and due diligence. And so we're happy to announce that our Series 3 offer for the Infrastructure Fund is still open. It closes on the 10th of July. Any investor who is interested, all you have to do is send an email to us. The details are on the screen. I'll be certainly able to get back to you. Thank you so much, everyone, and wish you an enjoyable rest of day to you. That's it from us, and bye for now.
Thank you, everyone, and enjoy the rest of your day.